Hello, friends. How's it going? My name is Mike. This channel right here is Health and Wealth. You are here to talk about Alti today, and so am I. Ready to go. This is episode number 4 of a 12-part series on Alti. This is season 1. Season 2 will be coming up after that if we get renewed, that is. How do I get renewed? I need you to hit the subscribe, the like, and hopefully you enjoy the content. If you do, let me know in the comments below. But let's get into it. It's been a really, really adventurous week over in the Alti world. If you don't know much about it, I hope to go over a little bit about the fund with you today, give you some education on where to find the information so you can help yourself find the info if that's something you want to do. If not, just watch my videos. I'll go over it a little bit as we go here too. But for me, I was dead set against Alti, up to about 2 weeks ago. It just was like a fun that was not interesting to me at all, and I can tell you the reason why. And a lot of comments in my Alti videos are resembling the same thing that I was saying as well. So this is the reason why I wasn't invested in Alti. It just was a poor strategy. It wasn't working very well. It was paying out distributions, which really is YieldMax's motto, right? To pay out maximum distributions, but the share price was falling dramatically. And so Yolmax made a change in the way they do things over at Alti. It was around March 8th to March 10th that this happened, and we've seen an improvement. So let's take a look here. Share price today, by the way, $6.14. It is lower, and I'm going to tell you the reason why. Today is the X distribution date. Yesterday was the announcement of the distribution. Today is the X date. Always on the X date, it drops. I shouldn't say always, but a lot of the time on the X date, it drops the share price of the value of the distribution announced. So this one is 10 cents. And so you can see the kind of fall off the cliff right here. If we go back a month, you're going to see a few cliff fall offs here. But the hope and the dream is that it comes back up in value in that time. So what I was talking about was the value of the fund and what happened, right? So it was around March 8th here, March 10th, we'll say. And then there's some more tariff talk. That's this little cliff right here. But like from April 4th on till now, the fund is actually up 12% share price. And you think to yourself, whoop de do, right? A lot of funds are up, and a lot of funds are up a lot more than 12 cents. And so I agree with that statement. Now, what are you getting in place of the growth of the value of the fund, the price, the share price? What we're getting is a distribution from YieldMax itself. And so, what I'm going to show you here is all of the weekly distributions. So, since it changed around March 10th, it started paying a weekly distribution. So, you can see right here, this is when it was monthly, and then it switched over to weekly. There's March 12th, very first payment, 10 cents, 9 cents, 9 cents, and you're going to get familiar with those numbers because it's roughly 8 cents at the lowest all the way up to 11 cents at the highest, and this is every single week. It's been doing this since March. We're now at the end of July, moving into August. So, for me, it was about 2 maybe 3 weeks ago I started to kind of like get a little more happy with the idea of buying into Alti. And the reason that I got into the idea was because if we go like this, the share price started to become a lot more stable than it was before. For me, I want to get my pie. I want to eat it too, but I'm going to put that into an actual sense. I want my share price to be somewhat level, but still get some distributions there, and that's what I'm getting from Alti so far here. So that's the reason I bought it. I felt like it is a good purchase because it's going to pay me a distribution every single week, helping me compound that value of my account a little quicker. Now, this is not advice. I'm not a financial advisor. I'm just some guy on YouTube sharing my story, what I'm doing with my money. And I know a lot of you are kind of doing the same thing with your own money too. But my hope and my dream with this series is just to educate you a little bit more on the entire fund, positive, negative, all of those things here. I want to be impartial with this. Okay. So There's the chart. I mean, again, if we rewind 2 seconds, that's what it looked like before. So a lot of people are like, "That's ridiculous. I'm not investing." But there has been a massive change, and I want to talk about that change a little bit more in a couple seconds from now. Before we get there, though, if you can hit the like, the subscribe down below, the little bell icon to let you know when the videos are going to be airing in the future, I would love that. Trying to get to 10,000 people before the end of this year, and I need your help. If you're not yet subscribed, today's the day. Let's make it happen. So, one thing I want to talk about is the website. It hasn't necessarily updated from yesterday, the announcement, and I can show you how I know this. There is no distribution in here from yesterday yet. It's not updated. So, what I'm about to show you might be slightly out of date, but the last video we talked about, and I'll put it in here, we talked about the net asset value of the fund. This is the amount of money that we have invested in this fund. And right now, Yieldmax's website is showing $2.47 billion. I think the last time we did a video 1 week ago, it was in the $1 billion range. So this fund is growing very quickly. It is panning out to be the second biggest fund at Yieldmax right now, and it's quickly gaining on MSTY in popularity. MSTY is just over $5 billion in AUM, assets under management. This one's at 2.47 billion right now. It's a fun number to look at. It's a fun number to come check out every couple days to see if it's growing or shrinking. The shares outstanding are 398,800,000. That's how many they're going to have to pay. 10 cents per share too, which is crazy, right? And so let's talk about the good. Let's talk about the bad and the ugly here. The good is that we're getting 10 cents this week, right? 10 cents for a lot of people will be tomorrow. For me, I get it on Monday. I'm going to talk more about that coming up here as well. The bad, the thing I don't love is the gross expense ratio, right? 1.40. Looks like there is a waiver here of 0.10%, meaning that we're paying 1.3%. So that's not a great number. We are paying more money for this fund, but it is actively run, which means that it has a lot of moving pieces that I know I wouldn't want to do. So I'm paying somebody to do this for me, and I'm going to show you those moving pieces in a spreadsheet coming up that I've actually downloaded right from Yieldmax's website right here. You can do the same thing yourself. I would definitely recommend that. So I'm going to bring it up right now. Here it is. I've color coded some things, not everything in it, and I'm going to zoom into it a little bit here as well. Again, I've opened this up today. Today's July 31st. I opened it around noon today and did some color coding for your viewing pleasure. What I've done is I've highlighted all of the company names that they actually own. So this is the strategy change. Part of it was that they started buying the companies, and because they're doing that, they're doing something called a collared approach. Let's dumb that way down. They're also doing puts on these companies to protect the downside. So I talk a lot about market fluctuation, crashes, and what happens if the market goes down. Oh, now our house is on fire. We're totally screwed, right? So what happens if that happens? Well, Yieldmax has put some protective measures in place. They're not foolproof. They're not going to save like a ton of money, but they are going to limit the downside a little bit here. So what I'll do is I'm just going to look at the very first one, then I'm going to go down to where the yellow is. Okay, so the very first one is some company. Maybe I shouldn't have picked this because I don't even know how to pronounce that. Applied Optoelectronics. There you go. And they actually own the shares of this company, right? So they own 3,235,300 shares. Their average price is $23.06 of this company. And then down below, it tells you how much it costs to buy that. Down below are all the options. So I'm going to scroll down to things that you and I both know, and I'm going to go through all of the ones that are more familiar to us in the Yieldmax world. All right. So the very first one is Coinbase here. I'm a big fan of Coinbase. I actually use Coinbase to buy Bitcoin, right? And so it's a super simple app. It's pretty awesome. So Yieldmax has bought Coinbase. They've bought 304,500 shares of it. Wow, right? Their average price is $377.48. And then this is how much it costs to buy it. And I don't know, can I zoom in a little further? Oh, yeah, there we go. So the stuff in the yellow is ways for us to make money. So what they do is they do covered calls on these, right? And so you can see they have different strike prices: 405, 410, and 415. What that means is that they're hoping that the price of Coinbase by August 1st does not go above these numbers. Because they've done that and they've created it with this amount of shares in each one, they generated income over here on the right hand side. The minus signs is weird. Is the income that they've made? It's not a negative. It's actually a positive. Okay, so they this very first one here, they made $161,777. The second one they made $405,312, and the third one was $323,564 in premiums that they brought in. It's not guaranteed. It's not even close to guaranteed that that's the locked in profit. What they're going to do probably right now, as I'm making this video, is close these options. And depending where the price of Coinbase is at, it's going to be, for pennies, or it's going to cost them a little bit of money. If the price of Coinbase is over $405, it's going to cost them a lot more money to close this option. Down below, this is the protective stuff that I'm talking about. They have puts in place at $340 and $350. And so what they're doing here, they have to pay money to make that happen. But what they're doing is they're protecting the stock price if it goes down. They're protecting our overall price at Alti. I am curious about the price of Coinbase right now, so I'm going to go take a look at that. 383 is the price of Coinbase. 378 actually. Wow, that's taken a big dip since the last time I looked at it. And so 378, we're looking really good on this one. They're going to be able to close this. Who knows? Maybe they leave it open for tomorrow to get even more of this thing called time decay to generate more income for us. Let me go back a little bit. This is the generated income, but if they let it go further and they close that option, then it's going to cost less to close it if the share price is way lower than their strike price of 405, 405, 410, and 415. That makes sense? All right, let's look at the next one. This one I'm very interested in. It's Robinhood. Now, this one was a little sketchy because Robinhood had earnings yesterday, right? So they opened this one up. They have 845,300 shares. So they could be generating some income if the share price went up. They bought it at $106.10, and that's how much it costs them. They have two calls on it, right? So 107 and 113, and then they have that put sitting right there at $97, right? So if this thing kind of goes down, then that would trigger. But the minus signs again are money in our pocket as premium. The plus sign is them paying to open this option. So the goal for us is to have Robinhood by August 1st under $107. I've opened it up. Let's take a look at it together here. So it's at $103 right now. So personally, I don't know about you guys, but personally, I would be closing that one today because I would be a little nervous about that price triggering getting over the 107 mark, right? Locking that profit. Generally, they do close options on Thursdays or Fridays over at YieldMax. I've got a couple more for you to check out here, but I think I didn't count, but they have anywhere from 15 to 30 different companies here, all highlighted in green. The next one's Palantir. This is PLTY over in the YieldMax world. They own 456,300 shares of this. They have three calls. They have 162.50, 160, and another one at 162.50. Okay, and then that's the income they generated from this. Lots and lots of money. The ones in white here are their puts on these, right? So the call and the put. And you can see it's the same amount of shares, by the way, 1,059 one way, 1,059 the other. You can see the value here is different, though, because it was cheaper to buy the put than it was the call. I don't know if I should use the word buy. To create a position in the put and the call might be a better way of saying that. Just because in the option world, buying and selling is a pretty tricky word in that world. So I'm not going to say that word. All right. So what's the goal here? 160 to 162.50. Let's take a look at Palantir, or yeah, Palantir itself here. 158. So it's underneath those. That's good. Again, I would probably close this today to lock in that income. To close it, they're going to have to pay some money to close these, but it wouldn't be as much if the price was closer, if that makes sense. All right, so that's your Palantir. There is one more I highlighted. So I thought we got Hood, got Coin. Oh, I didn't highlight it. Let's go. I have it up here. Meta. Now this one is interesting. So Meta's share price today, 775. Look at that. That's why creating calls during earnings season is very risky, but you do get a very juicy premium. Is it worth the risk? I'm not too sure, right? So 775 is the share price right now. Let's go find Meta on this list right here. I didn't highlight it, but I definitely want. Oh, I did highlight it. There it is. I just highlighted a different color. Oh my goodness. So what was Meta again one last time? 775. So you can see they have 70,000 shares of Meta. Their original price is 695. So they're making money on the upside of owning the shares. That's good news. But they do have one call here. It was 700. So it wasn't like a massive position. And so they set their strike price at $750. Well, it's now $25 over top of that. So this is that example I was talking about that, they got the premium of 442,750 bucks, but now they're going to have to close this. It's going to cost them some money to close it, right? We're talking probably, I can't even guess, but they're going to have to close that. It's going to cost money to do it. So they did get the upside, which is fantastic. But now they got to close it because the Meta had an incredible earnings call yesterday. So again, this is a pretty good page. You can download it yourself. I like to color code it and go through each of the sections just to kind of get an understanding of it. Um, just so you know, Alti is trying to find the most volatile names out there on the market. So some of these companies you may not have heard of before. I know I haven't heard of a lot of them before, but I think it's really interesting stuff. I do want to go over a couple other little things with you guys here. First, I'm going to go over my own spreadsheet. I have a personal target here and a goal of 1,400 shares as quick as possible, but I'm not using margin or anything like that to make that happen. But here's my spreadsheet. I just updated it before this video here. So my now total investment, because I just got that MSTY distribution announcement. I really wanted to buy on the X date. I also didn't want to wait for next X date, which is next Wednesday, Thursday, next Thursday. I didn't want to wait. So what I did is I went into my old bank account. I grabbed some cash, the total amount that Misty's going to pay me. Because I don't know if you guys have been watching the series, but I'm taking all the Misty distributions and I'm putting them into Alti. So I didn't want to wait. So I went into my bank account. I took what Misty's going to pay me. I put it into my brokerage account, and I bought these shares this morning at 9:30 on the dot. I got them at the price I wanted to. I think my average price this morning was something like $6.17, something like that. And so that was good. I was able to buy 66 shares this morning, which is cool. And then I've also calculated the drip in here. My previous shares from yesterday were able to buy me one share. So you can see that right here under shares drip. I'm now up to 166 shares. My total investment's $1,033.06. The current market value as of the recording of this video could change, obviously, is 1,020, and my unrealized loss is $12.16. Total distributions received in Canadian 32.67. Total distributions received in US so far is $23.60. Now remember, I bought 60. It was 62 shares I bought this morning is what it was because I was at 104 before. So remember the 104 multiplied by 10 cents. You're looking at like $10. I've only had two payments so far. Next week's payment should be a lot more, right? Next week's payment, if I grab the calculator, I like to kind of lowball the estimation for this. And I mean, it's been very consistent. If I go by 9 cents, this should pay me 14.94. I do get taxed on that, so 14.94 minus two. I don't know what that was. 14.94 minus. Let's just call it 2.95. Let's get crazy. So 11.99. So next week, it's still only going to buy me one share on drip. I'm very, very close though, aren't I, for it to start buying me two shares on drip. So my goal is to generate $600 a month in income before I stop investing in this. And so I've kind of done a little math in my head. And that math is I want this thing to I want to keep investing until this thing stops at 25. So 25 shares um, a month, or sorry, a week would be 100 a month, right? And that's going to go ahead and get me to paying me $600, right? So I don't know if that made sense or not. 25. Oh, that's what I wanted to do. I'll be okay. Let's rewind a couple seconds here. 1,400 shares. Multiply that by 10 cents a share. It's 140 bucks. You divide that by 625. There you go. So it's 22 shares is what I want every single week on drip to be able to propel my account even further down the road and generate a lot more income for me. I have Alty's total distribution pay $13.61. I also have indicated here percent to target. So I want to get to 1,400 shares. Right now, as of July 2025, it's July 31st right now. I'm at 11% to target. That's pretty quick. I get another MSTY payment 4 weeks from today that will increase this probably up to around 200, which is going to propel that number up every single 4 week period here. You could see I now, before I had 87, now I have 166 shares. So, and dripping, right? Shares are dripping. It's a little messy, but I'm going to organize this a little better for future videos. But um, yeah, and my average cost right now is $6.22, so I can get rid of that little bit right there. So that's that. I also wanted to look at this dividend calculator here. Last week, somebody had mentioned on the video that dividend calculator here at MarketBeat is a little bit exaggerated. What they noticed was if I had to put the total percent that YieldMax is saying right now, the numbers were inflated. So what I've done is I've kind of brought it down a little bit here. So I'm going ulti, I'm going weekly on the distribution frequency. I'm saying yes to the drip because I'm doing drip, right? Number of shares that my target is 1,400, and the current share price at the time of this video is $6.16. I do want to get rid of annual contribution. I want to make that 0, and I am putting my own tax in. Can we take a pause, everybody? 15% is my tax that I pay on these funds. I don't know how much you pay. Come to this website, put your own numbers in, check it out, right? The purpose of this video is education and entertainment. So check it out with your own numbers, okay? What about the tax? I don't know if you guys have seen that person in the comments, but always there's that person. So that's why I'm pausing on this. That's the tax for me, okay? Um, I turned down the initial annual dividend yield to 75%. I'm going to show you why. I also took the expected annual dividend amount increase to -5% each year. Okay. And I've gone ahead and years invested, 20 years. And so I think the reason I've gone a little bit lower is what we've seen at YieldMax is that as time goes on, the price of most of their funds is dipping, and so is the percentage yield. It's coming down too. I don't know if that's going to necessarily happen with Alti or not, but I just want to play this one a little more safe than usual, just for the purpose of, again, education and not overhyping something. So what I did was I went, how much did I go? 75% annual distribution. So it came up with $6.82. If we did 52 weeks times 10 cents, that would be $5.20. If we did drip, it would be a heck of a lot more because we're compounding those weekly, right? So I've chosen 75%. This number is probably just slightly lower than what you would actually get on drip, but I think it's more of a safe play for me to say it out loud into the world. You get it? All right, cool. So there's my 1,400 shares. My annual dividend per share distribution per share is $6.82. Annual distribution $9,543, and then after tax it would be 8111. Pretty darn good. If we get our calculator out, here we go. 1,400, multiply that by $6.16. It would cost you $8,624 to buy these shares today. And then it says here your annual dividend after tax is 81.11. So you're bringing in a lot more than 75% here because you're using the drip. You're just allowing them to buy their shares over and over and over again. So year two here, we're up to $14,647. You've done nothing. You've forgotten about it. You left and you never looked at it again. Just kidding. Don't do that. That's bad advice. Pay attention to your investments because things could change, right? Perspectives can change. Strategies can change. Maybe they're adding new funds that you don't like, right? Pay attention to your investments. Year three, though, you were starting to make some real money here, 25,591. Year four, and again, this is after tax. Year four, 43,336. For me, that's it. I can retire on 43,000. I can definitely retire on 43,000, especially if I mean, I'm not even using all of that. I'm going to reinvest a lot of it back in. I think for me, I still have a mortgage, but I have a partner, right? She pays a lot of the bills too. So I'm lucky in that sense. For me, mortgage is like 2 grand a month. Uh, I don't know, like 4 grand a month is life right now. Um, Ballpark figure. And, she pays half of it. So I could live off 43,000 for sure. Now the problem with that is it wouldn't be reinvesting. There could be some downside in the share price here. So I wouldn't probably do it yet, but in the next year here, year five, I'm bringing in $71,244. Boom. Right? Boom. That's awesome. Now, if we scroll to year six, you can see it's starting to compound here. And again, I like to look at the numbers after tax. I think that's a really good thing. So it gets a little unrealistic up at near the end in year 20. You're bringing in $8 million a year. I want you to exercise caution with your thought process right here. And if it sounds too good to be true, it probably is. So I mean, if you're playing around with this tool, you can even lower this. You can even lower this to like let's say it goes down 10% a year, right, and change that calculation. I think that's probably a better idea. Oh yeah, look at this. See your distributions; they're starting to flatten out, and you're all the way in year 16. They start to flatten out. I mean, you're still getting a pretty good distribution here, but they are flattening out because we just set it to minus 10% every year. So kind of makes sense to me. But I think this is a really cool calculator. It is good to exercise caution, but I think it's a good calculator for sure. It's a lot of fun, that's for sure. So this is my ulti. I'm really excited about 4 weeks from now, especially because I get to buy a lot more. But over the next 3 weeks, I've set it to drip, right? So it should buy me an additional 3 shares in that time. And I mean, that's a big whoopity do. That's, 9 to 10 cents. We're talking like 30 cents in extra value. Who cares about that? But once we start adding into the 200s, the 300s, the 400s, and the 500s is when that is going to start going 2 shares a week, 3, 4, and 5 shares a week. It's going to start buying. Once I get it up to 20 and 25 shares a week, we are absolutely cooking and rolling. I'm excited about that future for sure. If you haven't seen the original video, I'll put it at the very end up top here. And then I would recommend watch that one, season one, episode 2, episode 3, and this is episode 4. If you enjoyed the content, again, I hope you hit the like, the subscribe. My name is Mike, by the way. This channel is Health and Wealth. You have yourself a wonderful night. Bye for now.